Appreciate everybody joining me this morning. Investing in junior mining, or I think it was called originally investing for dummies in junior mining, which is pretty much the same thing, right? So since you're all here, are we all dummies because we're investing in junior mining, or probably looking at the markets again today, it's like we must be dummies. So because there are other opportunities out there that give you 30% every year, apparently, without much risk, apparently. So let's dive in how you can actually try to generate a bit of a return in junior mining, what to look out for. Let's start. Just a quick agenda. I really want to keep this casual. There's very few of us, so let's make this as interactive as possible. If you have questions, just heckle me. Just jump in. There's not much of a format. I have a couple of ideas. Like if I get the computer connected to the internet later, I wanted to run you through like how I do a quick due diligence on something. Like you can throw me a company name. Ideally, I don't know it, and we go to the website together. I'll show you where I go first. Just my quick process for a quick, 5-minute quick and dirty check on a company before I even dive any deeper. Maybe we can do that. So, or I'll just hook up my phone. That's fine. Quickly, who are we? Why invest in junior mining? How to choose a mining stock? Share some resources that I use on a daily basis as well. And how to invest in junior mining. And at the end, if we do have some time, I brought some stock ideas as well, so we can talk about that. A couple things that I've been investing in that I've been working on and working with. So yeah, let's run through it. And as I said, let's keep this light and interactive. Please feel free to just jump in with any questions. And we want to make this it's a workshop, right? I didn't expect to be on a podium giving a lecture. So that really works. So who are we? I said that yesterday on the panel. I set up Soar Financial over 10 years ago. We worked with over 115 clients, and that excludes companies we work with on a conference level as well. We're way beyond 200 clients when it comes to that as well. Some of our clients include Barsley Minerals and Corvus Gold. I mentioned them first because they're being taken out by AngloGold Ashanti right now. So as a PR company, that's the end goal. Like you want your clients to be taken out. And that's what we're striving for. Like we work with our clients long term. We're not pump and dumpers. Like Corvus, we've worked with for over 3.5 years, for example. Right? Other clients, Maritime Resources, Minera, Alamos. Used to be a newsletter writer as well from 2012 to 2018. We stopped doing that because we didn't see enough money in it, because we didn't want to focus on it full time. And doing the math, I had a partner in it as well. Running the German small mid-cap part, I was writing the resource part. And then if we had to split the revenue in two, it was like, this doesn't make any sense, like financially, right? So 80-20 rule. So we stopped writing the newsletter. We still have a paid-for blog going in Germany, just distributing some really quality content. I got to peacock just a little bit, but we really early on recommended Kirkland Lake and Atlantic Gold. You can see that on there as well. The publications, the PDFs are actually still on the website. So whatever I'm saying what I'm saying right now can actually be proven, right? So it's on the website still with a track record. And we had a couple other takeouts like Orico Metals and others come to mind early on. And we called the early days of the bull market actually in May 2015. That's when we saw a bit of a bottoming in the markets overall. Like all these companies like a Kirkland Lake, I think it was Lakeshore Gold that we had recommended and then recommended Kirkland after, bottomed around that time and didn't dip any lower. And we see something similar happening right now as well. We're hosting SF Live interviews. So I'm not sure if you've come across those, but we have a YouTube channel, youtube.com/Soar Financial, and Twitter channel, twitter.com/Soar Financial, where we host live interviews with CEOs. Almost daily, not when I'm traveling, obviously, but we do site visit interviews where we interview the CEOs on site. And it's a growing channel. We don't give any investment advice, so it's not the biggest channel because we don't tell you directly what to do with your money, but we provide you additional information about the companies. It's genuine. Like I'm wearing a flannel shirt today for a reason, because that's how I interview the CEOs as well. It is just as casual. There's a good conversation. I hope it's interesting for everybody, because I'm trying to generate a format that I would watch. It's not a sterile suit and tie. So tell me about your Q2 results interview, right? So yeah, go ahead.
So when you say you have 115 clients, so are you reaching out to these companies? Are you finding these companies and you're interested in them, or are they reaching out to you and looking for publicity?
Both, the latter. So it's not like we walk around the floor here, say, hey, we're Kai or Soar Financial from Germany, we do this and that. Right. It's referral basis. Okay. So, and we really are picky. Like if you look at the names that we work with, we only have 7 clients right now on retainer. Okay. We could have more. We don't want more. So that's the idea. And also back in 2016, we bought Oren Inc., a data analysis company where we track all the financings in the junior mining sector. So we actually know on a daily basis how well the sector is doing. And I've got some slides prepared later on to tell you actually what the overall market sentiment is in terms of financing as well. Enough about that. If you have any questions about that, feel free to reach out. And no worries. So I'm assuming you all are invested in junior mining stocks here. Who's invested in junior mining stocks? Okay, we got a couple of newbies. All right. Okay, let's see what we can teach and see if we are the dummies here investing in junior mining stocks, right? So some of the reasons why are we investing in it, and I highlighted number 5. Your eye is immediately drawn to it, but there are other reasons as well, of course, right? Fundamental reasons, being it a monetary hedge, leverage to gold and silver prices as well, but. If it's not grown, it's mined. The other thing is, like, you have to invest in mining. Whatever you're doing today, like, if it's not grown, it is mined. It comes out of the ground, right? So parts of cell phones. I'm not telling you anything new. I don't have to go into details there. But also, mining has deep-rooted history. Just drive around this area. Like, mining is part of society here as well. That's why we're invested in it. Germany, not so much. I'm German, by the way, by descent. I moved to Vancouver 2.5 years ago. Mining is not a big part of our culture anymore. It completely disappeared. Like, there's like, in terms of PR companies, I think I have 2 competitors in Germany that also look at mining. So there's no mining culture really. Although German investors love gold stocks, but that's based on the Weimar Republic back in 1929 and massive hyperinflation. So it's a bit imprinted in our DNA, investing in gold and gold mining stocks, but we have no mining. So that's why it's a bit different. But here it's part of society. You drive around, like, everywhere you go in the US, it's all based on mining and gold rush. You can follow gold rush trails, like, all the way up to BC, and I've been to Barkerville, like the old gold mining town. It's phenomenal. Like, been up to Dawson City. It's just part of culture, and that's, I think, part of it why we all invest in it to a degree, because it's somewhat natural to us to at least look at the sector. Supply-demand dynamics, that's more on the copper or base metal side, like supplies, like we talked silver squeeze, but to be quite honest, I don't know how much silver is out there and not out there. So that's a bit difficult, but on copper, zinc, lead, you have clear supply and demand, like, information that you can invest on and base your thesis on, right? Hedge and leverage, I mentioned that, but probably the most dominant reason as well, like, you can make a lot of money in junior mining investing, theoretically, if you do it right. And that's the tricky part, right? So there's a massive risk associated with it. This is an ultra high risk sector. So we've seen massive summer doldrums this year. I think it's part of it because we are a high risk sector. Because of COVID, everybody worked their asses off for 16 months and then disappeared over the summer. And since we're a high risk sector, most investors just cleared their portfolio and said, I'm not sitting on this for 6 weeks, especially with a slightly declining gold price. And that's why we have seen volumes drop off, shares been sold off, we've seen declines in share prices. That's a sign of a high-risk sector. People are just clearing their portfolios, waiting to come back when they have more time to focus on it. So we're hoping to see this come back slowly, but now we got tax loss season attacking us here very, very soon as well. So we'll have to keep an eye on that. I also brought you the life cycle of mining and mining investing. The next slide, actually, I'll go into a bit more detail, but most of you might have seen it. It's the Lassonde curve. It's the discovery and development curve. For many, it's probably not new, but we talked about making capital gains on your investments, and this curve really is a great indicator on what could happen throughout the life cycle of a junior mining stock, the ideal life cycle of a junior mining stock, right? So you have the pre-discovery, the concept phase, you start finding a project, you do some geophysics, you do your baseline geology work, and you start drilling. At some point, you do make a discovery. And that discovery can lead to massive gains. Investors in the market looks up to it. But then you start going into that orphan period where you start developing the project. You know, you've made the discovery, everybody was excited, but now comes the time where it actually costs a lot of money to drill out the deposit, do a lot of infill drilling, do your technical studies. You have to raise money, you have to dilute, meaning you have to issue more shares to finance your operations. And then you start entering the development phase. When you start raising capital from the banks, you raise debt, and you start going into the development project and startup phase. So that's the typical, like, life cycle. Most problems actually happen, there's a laser pointer on this, right? Yeah. Right around here as well. That's when companies, like a lot of geos or CEOs that go from exploration to production fail at this stage because they're not able to raise financing. They screw up the engineering because they don't have a clue, quite frankly, what they're doing because they're geologists, not engineers, running an exploration company hoping to go into production. And that's when it gets tricky because you need a completely different skill set. So you can have a lot of fun here, making money, But you can also make money here. Like on average, I talked to a fund out of Germany recently, and their investment philosophies, investing into development companies, are just starting to break ground, because on average, you can make 100% without any risk. And that's proven. Like you can look at companies, development companies over the last 15 years, there's always 100% upside. And almost 90% or 90% of the cases, you could actually make 100%, almost risk-free, because the company is going into development. Of course, there's construction risk and precious metals price risk and things like that you have to keep in mind. But on average, you could make 100% on those development stories before they even go into production, but only from this point on. So there's a lot. That's why, like, you have to be really careful. That's why I brought the Lassonde curve. Like, also when you're here meeting with companies as well, make sure where are they on this curve when you talk to them as well, and make up your mind on that. Is there still room for a discovery? Are they in production? Like First Majestic is here. Obviously, they're up here somewhere, right? And they're part of the silver price like movement as well. So keep that in mind, because it can really help position your investment. Why invest in junior mining, and what is actually stopping you? Like, may I ask, why haven't you invested in junior mining?
Me?
Yeah.
I didn't know anything about it.
Okay.
We're investment dummies.
Okay. Okay. No, so I'm not an engineer. I'm not a geologist, right? So for me, technical jargon is a big, big hurdle. Like sitting in meetings or talking to the CEOs here, and some of the CEOs are geologists, so they often forget who they're talking to or what they're selling, and trying to make it like palpable, like understandable actually, right? They talk about orogenic gold hosted deposits in Nevada. I was like, what is that? Like, right? Like you don't know. And then you look at the grades, for example. One company puts out 10 meters of 0.5 grams, and that can be good. The other one puts out 10 meters of 10 grams. Well, that sounds way better, but that actually might not be mineable, although it's better. And that's where the technical jargon comes in, because that's when it gets complicated. Mining is not as easy. It can be easy if you just invest and follow advice. But if you do a bit of due diligence and dive a bit deeper, and being here at this conference is the first step to doing that, or is a big part of it, because you invest actually the time to do your research and learn about it, right? And here you can ask people. Like, one part also is lack of information. We as the retail investors, you're always at the end of it. Like, you always receive information last. That's one reason I really don't like investing in blue chip stocks. Because when I learn about something that's a miss at Amazon or something, and the stock is down 5%, I'm the last one to find out. Here in junior mining, you actually have an advantage. The CEOs are right there. Try meeting Jeff Bezos for an update. That doesn't work. Different scale, right? But here you can meet with them. You can ask them, or at least the second in command, and they always answer. Right? They're here for this. They want to talk to you. They're interested in hearing from you and your thoughts and concerns. Maybe it even helps them do their job better. Right? So use that opportunity. So lack of information, I almost put the onus back on the investor. It's not always the companies that are not providing the information. It's the investors not asking for it as well. So there's an interesting part of that. And of course, then you're stuck with bad advice sometimes as well. You have brokers that are only interested in generating fees. You have newsletter writers and influencers that are absolutely clueless, because they're also not geologists or engineers, and they get fooled. They can get fooled as well, right? That's part of bad advice. I'm not saying they're bad apples. They're taking money on the side to shovel you some stock picks into your portfolio, but it's just bad advice based on their lack of knowledge, or maybe they have a bad network as well. You don't know. Or peers on social media. And I refer, for example, to CO.ca or Stockhouse. If you're in a company chat, and there's always that one person that is always super bullish, and there's always that one person that's super negative on something, because they might have lost money, they might have had a bad meeting with a CEO or something. There's always a reason. You always have to ask for the motivation of those people posting, right? But peers on social media. So if you go on CO.ca, you'll always find somebody who confirms your views, and you'll always find somebody who contradicts them. It's for you to make up your mind and find the middle ground, right? So be careful with bad advice, is my point. And time for research. I mentioned it. You guys are here. You're investing the time. It's really key. And there's way more to it as well, like, than just being at the conference. Like, of course, the CEO is not going to tell you how much money he makes and how many free shares he got when he vended in the project from his own private company into the public company, right? So that's also something to look forward to, or to look into.
That's a question I have. We can go over there and talk to these guys, but not one of them is going to tell you, oh, we're not looking so good in this sector or something, are they? I mean, honestly, are you going to get a completely honest opinion, do you think, from them?
yes and no. The good guys will say that, like, and you'll find the good guys here. Like, of course, there's always bad apples in between. They're always out for your money. Don't get me wrong. Like, we're in House Street. There's easy money to be made. If there's shares run, it's easy money, right? So, us retail investors, we're always the prey, right? But you'll find out. Like, that's what I mean. Like, do your research. Go here, talk to the CEOs. You'll find out who the good guys are. They'll tell you, it's like, well, we drilled here in this section. It didn't really like hit what we were looking for. That's an answer I'm looking for, right? It's not like, oh, we had great technical success. No, that's garbage. No, like that doesn't do anything. Right? You hit dusters. So, and that's what you should be looking for. And but that comes over time. Time for research, meaning putting that time in and refining that gut feeling, like who's actually legit. And then it comes back down to maybe there is a newsletter writer you trust, and he confirms your feeling because he's been on a site visit with them, or an influencer on social media or so that said the right things. So that sort of confirms your views initially. But that confirmation bias is also dangerous, right? So it's really time for research. Talk to these guys. And like one thing I forgot to mention, I mentioned SF Live earlier. There's like 15 other formats out there that produce fantastic content. And COVID, maybe one of the silver linings of COVID, was so much more quality content coming online. And being able to do that, it's like I'm still overwhelmed and going through it. Like I'm not even sure who to follow anymore these days because there's so much good stuff out there, right? So find somebody you trust and like, and watch their interviews, see what they do, see if they ask the right questions to the CEOs, and make sure you check the disclaimer whether it was a paid-for interview or not. So that makes a difference. How to choose a mining stock. That's the interesting part, and that should be the main part. I will put it on one slide, but I could easily spend an hour talking about these. I mentioned a few things yesterday while I was on the panel. For me, management is still the most important part. Like I had a conversation with a German fund manager. I was on the road with him 2 weeks ago in Quebec looking at 4 or 5 projects. And we had a discussion, like for him, the project comes first as a fund manager. For me, the management comes first. Because you can have a great project, but if you get back to that Lassonde curve and you sit here and you can't take it there, the greatest project doesn't help you at all. Right? You might have to change out management to get it to that next level. And I have a couple like companies in mind, for example, that are stuck at this point right now because management can't get it across the line, right? So, and that's the tricky part. So for me, management always comes first because great management can even push a mediocre project forward and make money on it for the investors, for everybody involved. But a great project with mediocre management team, you're just done. You can't do it. It's wasted money. You all know it's a great product, but if you can't sell the product, you have nothing, right? So a couple things I found, doing due diligence, always check relevant experience. Don't read the CV on the website. Go to LinkedIn and see if it's actually complete and matches what they say on the website. Because oftentimes parts are forgotten on the CV, on the management side, on the website. So do a cross-reference. Google the name as well. Maybe there's a couple names of companies they've been involved in and that disappeared suddenly from their CV there. That should be telling. Like, why isn't that mentioned? If it was a disaster, why was it a disaster, and why are they like afraid to mention it? Like, if for me, for example, if I had a disaster I was involved in, it's a learning experience as well, right? So, and that shows you again, like, greatness of a CEO or of a leader. Like, you live with your disasters. Mining, we all know the odds. Like, 1 out of 1,000 projects goes into production at some point. So there's going to be 999 losers, right? I'm sure all the winners out there, right? But quite cynical here, right? But everybody had a loss in their career in mining. Like, otherwise we'd be all running Barrick Gold right now. And keep that in mind as well when talking. And especially when you look at a new company that you haven't heard of or a CEO you haven't heard of, check that relevant experience. And relevant as well also in terms of, let's say it's a gold company. If he comes from a copper project from somewhere else, from South America, and he's all of a sudden doing Quebec, take a closer look. Is he really qualified to do that? Maybe he was a doctorate or so in one of those projects in Quebec. That's perfect. But make sure there is a bit of a match. Like if it was a Collins-style geologist that's all of a sudden doing greenstone belt exploration in Quebec, that might not be the best fit. Not 100% ideal. Financing capability I talked about. Ownership is also an interesting one. And one I actually struggle with sometimes. Because there's young guys in the industry, like, and where I see like the conundrum is like, how do you actually get a decent chunk of the company without giving yourself free shares? So investors always say, well, I want a CEO to be invested as well. Like I want him to have 5-10%. But let's say if I come in and become CEO of a company, like I can't afford 10% of even a $10 million company. That's $1 million I'd have to put in my own money, right? But investors always ask, well, the CEO is not buying in the market. He's not supporting the stock. Well, you got to ask, like, is he the founder? Is he the CEO? Or is he a hired gun to do it? Like, there's different motivations as well. If he's the founder, ideally he has some cheap shares so he can keep his pro rata for a while before he gets diluted down. But then you have to ask yourself, do you want your CEO to have free shares? What's his motivation with the free shares? So he's going to fake a health scare and exit the company and start dumping into the market? That's the conundrum I'm in with management ownership as well. And what is too much as well? There's companies out there with 75% management ownership. Are you financing somebody else's hobby? Or do you believe in the financing capability that they can push it forward? Right? So for me, my personal level is usually 35% of management ownership, because that way I'm not financing somebody else's hobby. So that's one thing. Project, jurisdiction, geology, permitting, there's a lot of things to unpack in here. Of course, it starts with what is your personal flavor of the month, or what do you like investing in, right? Or if you're looking for silver, this is a silver summit. We didn't get a chance to talk on it on the panel yesterday, but investing in silver, are you okay with a silver lead zinc company? There's very, very few pure play silver companies out there. It just doesn't exist really. It's just by nature, right? It always comes with lead, zinc, or gold if you're lucky. Right, so you got to be comfortable with that, because that means complication in terms of metallurgy as well. You'll have to produce a couple different concentrates. Comes with an extra cost on the production side. Jurisdiction, besides obvious countries like Venezuela, North Korea, you got to find out if you're comfortable in Africa investing. That's more on the gold side than the silver side. But there's some great jurisdictions in Africa you can invest in. You just got to feel comfortable doing it and do your homework on it. And I don't want to cite the Fraser Institute, because they always ask very few people in the sector, and it's not really representative of the overall sector. But there are countries that are definitely better than others, like in Namibia or Botswana, or even Ghana and Mali are not too bad if you stay in certain parts of the countries. You just have to feel comfortable with it. Same here, actually in BC or Nevada, Idaho, I'm not 100% sure political risk is zero either, right? So getting a permit out here is just as complicated, or might actually be easier elsewhere than here. At least here, when you have it, nobody's going to take it away, and you have very legal, what do you call it, recourse if that happens, right? So you actually have something in hand. Or even in California, it might take forever to get a permit, but once you have it, nobody's going to take it away from you. So that's something you have to weigh, obviously. Geology, there are simple deposits, there's difficult deposits. When I mentioned there are projects with 0.5 grams of gold in Nevada, those are super profitable projects, because oftentimes you can save money on the production side, because you can just crush, or you can actually just take the rock and throw it on a heap leach pad without having to crush it or grind it. That saves you a lot of money, and all of a sudden a very low grade deposit is actually more profitable than a high grade deposit, because you have way fewer steps involved in getting actually the gold out or the metal out that you're looking for. So that's part of it as well, part of geology. I'm not a geologist, but I'm sure others can spend hours and hours on this. So Ben, if you have some time later, But permitting and social license to operate. I moved to Vancouver two and a half years ago, and one thing I wasn't aware of as a German, because we don't have First Nations in Germany, that it's still a big unresolved issue. And meaning not every company really focuses on that, doesn't really cooperate with them or with First Nations, and a social license to operate is not always granted. We've had First Nations actually block access and to projects, and I don't mean that in a negative sense. It's their right to do it, because the companies actually failed to consult or work with them beforehand, and that's a big part as well. It's more of a Canada thing right now, but also in Mexico, you got the ejidos, you got in Peru, you got different local communities as well that are just as involved as the First Nations up in Canada. So social license to operate, and don't just have the companies to give you lip service. Yeah, we financed that school or something. There's way more to that than just throwing money at the problem, and that's becoming more and more important as well, especially when the companies get bigger. I have a hard time still seeing ESG certificates being issued to smaller companies just because of capacity, size, and financial restrictions. But I'm a bit naive, because I believe that all the companies listed on the TSXV and TSX at least have certain standards. Right? There's always going to be a bad apple, don't get me wrong, but we as shareholders can hold them responsible and just sell our stock and crush the stock if we have to, if we don't like what they're doing. Business plan as well. Some companies really, really fail to communicate what they're actually doing and why they're doing it. Drilling is fine, but what's your end goal? Like drilling for silver or gold, great. I want to do that. But what do you plan to achieve with when you actually found something? Like, do you plan to take it into operation? Do you plan to sell it? Like, what's the end goal? And if you decide to go into production, give me an idea of what you're actually looking at. You don't have to come out with final numbers. That's what the feasibility studies and everything are for. But it'd be great to hear, like, okay, we're taking this to production. The goal is to target 100,000 ounces a year. Gold, that is, not silver. But give me an idea so I can actually go and tag along. Because I'm a long-term investor. Like, I'm not a trader, really. I don't have the time and patience for it. So I usually buy a stock and wait for something to happen, usually an exit, like with my client Corvus Gold. That's what we're going for. We go for an exit. That can be either going into production, and ideally the company gets too big for us, because we usually focus on the junior mining side, or it's an exit. So that's what we're looking for. Capital structure. I got a couple examples for that as well, but especially on the CSC, like how was the company set up? Meaning, who's involved? Was it a shell? Who ran the shell? Like, that's going to be a tough one to get an answer to, because you don't really see the people behind a BC numbered company. But go into the conference room and ask the CEOs and see if they have an answer. Because oftentimes through the RTO or so, like on the TSXV at least, I'm not sure 100% on the CSC, but for a shell company, you need 200 shareholders, and oftentimes you only get like 95% of the paper, and 5% or even more stays with the seller of the shell. So, and that can always be a headwind as well for a while you're starting out. And you as an investor, you don't want to be churning through paper first before you even get to anywhere. That can be quite frustrating, right? Previous financing rounds, find out like when was the financing done, what price was it done, especially when it's pre-IPO. There's always a family and friends round. There's usually 1 or 2 pre-IPO seed rounds. And then there's the free shares or the sweat equity, companies call it. So look for that as well. Like, I have no problem with free shares, because somebody gave up their job, let's say at a B2 Gold or at a Barrick, to start a new venture. It is venture capital, and they invest their own time and money and do that 100%. I don't mind if they get paid for it. The question is like, what's within reason, right? And that you need to find out for yourself as well. Is 100,000 free shares at 1 cent, is that a lot? 10 million might be too much, right? So that's something you have to look out as well. Investor mix. Difficult for an early stage exploration company to have institutional investors. But it comes back to management, like who do they actually know? Have they worked with big funds in the past? Do they have access to those bigger investors as well? Are they talking to the right investors already? Because a lot of investors, like pre-IPO, big funds can invest pre-IPO, for example. But if you know that they're at the table, maybe some of the brokers invested personally because you offered it to them, so you have a relationship with them, that's what you want to see. And then they usually come in after the IPO at a certain stage or when a certain milestone is reached. And that's what you want to hear from a CEO. Like, how are they involved in that? Property transactions, I mentioned that on purpose because I actually have an example for you of a dodgy property transaction where all of a sudden, like, a lot of free shares have been issued for at way over value for a project actually here in Idaho. So I'm not going to say the name because I blacked that out. I'm not here to bash anybody. I'm just trying to give you some examples what to look out for. G&A and salaries, that's an easy one because you can just go into the balance sheet and take a look. How much are they paying themselves? I really like the Management Information Circular. It's a MIC on CDAR. CDAR is the Canadian website for all the filings. Go in there and see how many options have they got, stock-based incentives, and also salaries. Like, junior mining CEOs shouldn't be making $400,000 a year. That's just out of this world, in my opinion. There's a certain level. Like, again, comes with a company. If that guy has a big company experience, there's a bit of a difference. But in general, new company, new IPO, I think there should be limits to it as well. And then how to choose a mining stock is the exit. Like, know when to sell. Ask the company for their business plan and see if it makes sense with your investment thesis. Like, what is your strategy? If you're a trader, are you just waiting for drill results? Great. Just know when to sell. When your thesis hits the point, are you waiting for the exit? Are you willing to wait 3 years because you believe in management? That's your exit strategy. But just make sure you write that down first, and you can follow up on that as well. I wanted to do a run through. Maybe we can do that at the end of the presentation of where you throw me a company name. We'll go quickly through how I look at a website within like 2-3 minutes and tell you if it's a good or a bad company on initial like observations. So some of the, like, Earnings, the other company I run, is the data company. I stole the slides from a presentation I gave 10 days ago, and I included that. That's where you can see the free shares. where the companies have received like 1 cent shares, not free shares, 1 cent shares. This is almost free shares, right? Through property acquisitions, investments, and that's what you want to see. Like that's why you go into the filings, and that you'll never see that in a company presentation ever. And that's something, even if you ask here on the floor, CEOs will try to avert that, especially if they have those 1 cent shares. If they're open about it, if they tell you about it, that's a CEO at least I would like to talk a bit longer with. Because if, as I said, like if it's sweat equity and they work 2 years for free, more or less, without any accrued salaries, that's another thing you can check on the balance sheet, then I have no problem with 5 million free shares at 5 million shares at 1 cent. That's fine. They gave up probably a proper paycheck to start this endeavor. It's venture. It's a venture capital company. That's what this is. Yeah, it sounds mining, but it's like a tech company out of San Francisco, right? So that's fine. A couple of things I already mentioned, vending of projects, exuberant amount of options. So it was actually a presentation I gave to companies or geologists in Germany. It was the Society of German Geoscientists, and they asked me, like, Kai, how can we properly structure a company? So that's why the don't mind the market kind of advice, like put the company together properly. That's the other one. I hope you can read it. But
Push on that last slide.
yeah, go ahead.
So where did you find this information?
That's
This is actually, this is an example from a real company.
yeah, it's on CEDAR. So it's a company filing on CEDAR, so they do have to file that.
Okay.
But you have to go sift through it. Like it's not something they put on the front page of their website, right? So, so yeah, no, it's all there. We just have to look for it, right? So, but nobody really does that effort. That's what I mean. Like put in the time for research. That's when you find gems like this. And I'm actually having a great time with some of my contacts in Vancouver as well, where we actually just share this information with each other, like where we start going down rabbit holes. There are days when on a Saturday morning, I lie in bed with my laptop and I chat with somebody and we start going down rabbit holes of like this company, for example, and we start looking at who's involved, where is it coming from, and we start blacklisting people, right? So no, it's interesting. Like it's playing like Sherlock Holmes and investigating on what's going on, who's involved. Like you can start building Venn diagrams. It's really it's a lot of fun actually doing that. And you learn a lot doing that because you learn what to look out for and who's involved in what deal. And then you see names popping up there involved in other deals. And then you start looking at the other deals like, oh, well, that makes sense, right? So, and that's what I mean by time for research. So the information is there, you just have to use it. And you have to start connecting the dots. One thing I actually regret doing, being in the industry for 10 years, I never started a notebook with names and connections. Like it's all up in here. But that also means I'm missing people. Like I'm missing some information. People I came across that like I told myself to avoid in the future, I might have forgotten about them, which is a bummer. But you can still do the research. You just have to time to find them. So one thing as well, it was a company, as I said, here out of Idaho, but they issued 33.74 million shares. I think the total value was about $12 million for a project. They maximum invested $2 million in. So there's a $10 million difference in valuation that is unexplainable, and those shares they went into a BC numbered company. Not sure. No, you can't see it in here, I think. But those shares went into a BC numbered company, so you have no clue who's behind it. So in those 33 million shares, all of a sudden, you start seeing them come out. Right. So how is that happening? Right. So there's incentive for people to sell because they are sitting at least on $10 million unrealized gains that they're trying to churn through the market. And that's what you should be looking like. That's why you go dive deep into those filings, because that's when you find this. And that's when you see like, and then all of a sudden, like you get told the greatest story, let's say here at a conference, and you believe in it, and then you go home, you buy the stock, and it might do well because they're spending quite a bit of money on promotion. But then all of a sudden, it's all downhill from there. Despite decent drill results, they're hitting their milestones. That's when you find out, okay, you actually have 34 million shares standing against you that the company has to churn through first before you actually can make a dent in the market and actually can make money before you can actually move on the other side, right? So that's why, like, as I said, shares disappeared in a number. Company can't really be traced. I think you can ask for information. It costs like $50 in Vancouver to file for a request, and then 2 weeks later you might get that information. So not ideal. Something to avoid, right? So, and the market owes you nothing, right? So from a company perspective, like you might think that your project is worth $12 million, but the market definitely doesn't agree, right? So doing the right thing, right? And that's again, from a company perspective, but it is very valuable, like from an investor perspective as well. So choose your shareholders wisely. Like in the seed round, who do you want involved? You have friends, of course, like that you want to do a favor or you think you're onto something. That's fine. Make sure you control them a bit so that they don't sell the shares into the market, because they actually make quite a bit of money. Because usually you do the seed round at 10 or 20 cents and then the IPO is usually at 50 cents. It's usually just a metric. But if it's your friends and family or the founders of the company, it's usually tightly controlled. Right? My mom wouldn't sell without calling me because she wouldn't know what to do anyway. Right? So that's what I mean. Then pre-IPO and pre-IPO too. Oftentimes I've seen in the past that these two financings are done quite closely together. Meaning we offer you 30-cent shares if you participate in the 50-cent round. So people that are in funds and investors have an incentive to do both. And then their average share price, of course, is 40 cents. They're still up before the IPO. But the company actually can say, okay, we raised money at a higher level. We got more money and all that. So it's beneficial. It actually works quite well. But again, you got to be careful who you place it with and then your IPO price. So choose your shareholders wisely, right? You want the sticky shareholders at first. You want companies or investors that stay along with you for the ride and don't start selling in the market as soon as the shares become free trading because you attached a warrant to it, which is an option pretty much to buy another share at a predetermined price. And you don't want to see that happening. I do like seeing escrow and lockup agreements, especially for founders or friends and family, that can be like where shares are being released maybe every 6 months or every quarter. That way, like, everybody wants to make money, right? Don't get me wrong. Like, the motive is to make money in this sector. That's why we all do this. But as long as it's controlled, I have nothing against that, right? So that's why I do like seeing those lockup agreements. Capital structure and warrants. Watch out, like companies with too many warrants or options outstanding. That might also be a ceiling. Like, I should have brought the chart of Minera Alamos. Actually, is a great example. Where they had a lot of warrants outstanding. Sorry, like 80 million warrants outstanding at. I think it was at 12 or 13 cents, and the stock was trading at 10, 11 cents for the longest time until those warrants expired. And all of a sudden, we're trading now at 60 cents. Like, you can see the chart. I didn't bring it, but the ticker is MAI if you look at it. Like, you go back 2 years, you can see what a warrant ceiling looks like, and you can go through that. So, and we're seeing that in a couple other companies as well. Where you ceiling, you wait for the expiry, and all of a sudden stocks start to move because you don't have that because people don't sell the warrants to clip them, right? So that's capital structure. I mentioned to start building the institutional relationships here with the pre-IPO part. One thing we've seen too many times happen as well, you don't raise enough money. One trap CEOs fall into is they raise money, they say, oh, we only need $1.5 million this year. And they only take $1.5 million, but they're being offered $3 million, for example. Well, so they take $1.5 million, and then the market goes to pieces. Like, I'm expecting that actually to happen, like later this year. Actually, it slows down a bit with tax loss selling. The financing window might be very, very small, right? So, and now all of a sudden you're struggling for another $1.5 million to continue your program, but your stock is also down 30%. So you have to raise money at a lower price. You have to dilute more. So make sure you raise enough so you don't have to come back begging for more money, which just is always bad, right? Especially when you're a new IPO company. Raise enough money on IPO, you get your milestones done. Don't start coming mid-trail program saying you need more money. That's when the door gets slammed in your face and you lose out. That's the tricky one I mentioned. Like, of course I want to see management invest alongside shareholders, but there's limits. Can they actually do it? Like, it's their day job as well. Like, there's always limited funds. They can't invest millions and millions of dollars into their own company. It's just not feasible. Right? So before you judge them too harsh, like, find out what their personal financial situation is. Did they come from a big win? Did they make $20 million on another deal? Of course, I want them to put $5 million in their next one as a sign of confidence, right? But if they haven't had that track record, because they were a geologist at a major company and they decide to go on their own, they can't invest $5 million in that company, right? So it's all comes with perspective. As I said, like, you always want to aim as a company. They should raise at higher prices and don't price yourself out of a market. We've seen a couple of IPOs recently that were just way too expensive. They're struggling with their valuation right now. Resources, real quick. I mentioned a few. Mining Stock Daily, Mining Stock Education, phenomenal. You probably know Bill Powers, phenomenal guy. Crux Investor, more for company. Kitco News, more for the macro. That's websites I use because I know Barrick CEO Mark Bristow was recently on there and it was quite insightful. And that's why I knew he wasn't going to buy Kirkland Lake Gold because he wasn't going to jeopardize what he's been talking about. Like, he'd come off as a liar actually from that interview. Like, Nico is buying Kirkland Lake Gold this morning, by the way, in case you haven't heard. Social media, Mintwit community. Follow us at Soar Financial. Happy to put you in touch or tell you a couple more handles that are worth following. CEO.ca, I mentioned that before as well. Newsletters, one I can recommend and is Exploration Insights. I like the unbiased ones that I know that are not in anybody's camp or involved or too close to a certain group of companies. So Exploration Insights, a very technical one, newsletter, but still one of the best ones out there. So, and I've got other ideas as well. I just didn't want to put like 30 names on one slide. How to invest in mining stocks. So a couple things, I'm going to run through that real quick. I'm personally not a big fan of the passive side because it doesn't help the industry. I'm in junior mining. I want companies to finance. I want them to raise money. You don't do that by being in the GDX. The funds don't invest into you directly. They don't give you money to develop the story. They buy the stock. Ideally, your share price goes up, but you're at the mercy of the markets, and you still have to raise money. Some of the managed funds, they do it all private placements. So if you find a good fund or a good fund manager who's actually actively involved, I do endorse that because they do provide capital to the companies because they participate in private placements. And then there's, of course, managed brokerage accounts, which I'm personally also not a fan of because I'm a control freak. I like knowing what I'm doing and I like putting my own deals in there. Although I do like a broker that gives me ideas. So that can be something quite beneficial. Private placements, I think, is one I use a lot. Personally, I don't buy too much in the markets. I participate in placements for various reasons. There's discounts, warrants attached, and then flow through and charity flow through, which is I'm not really eligible, but it's something that helps the companies, especially if they're like for Canadian companies, they can raise at a premium, meaning they can issue shares. Let's say they're trading at $1 and they're in a certain jurisdiction, they can actually issue shares at $1.60 because you, the investor, can write off the tax benefits. So they can add that on. It's a bit complicated, but for Americans, the charity flow-through part is quite interesting because you actually get the shares at a discount and you can buy them straight off a dealer. Sounds negative. Sounds like somebody standing on the street corner, but like a charity flow-through placement dealer, like a Pear Tree or an Oberon or so, they can actually facilitate that, and you, even as a retail investor, can get access to that. Negative with the private placements is a 4-month hold, something I have a hard time wrapping my head around still understanding that. But because it locks you in, a lot of investors, especially in volatile times, say, like, well, I can't afford a 4-month hold. I need my shares liquid if I need to sell them, right? Which I can understand, but then also questions a bit the motivation of the investor. So it's, again, a two-edged sword. Like, I'm a long-term investor. I don't really care too much about the 4-month hold. Of course, I'm always excited when the stock goes up 100% in the first 2 months, but I can't sell anyway. So I'm there for the ride. Stock exchanges, I purposely left out the CSE. The Canadian Stock Exchange. It's a bit like the Wild West. It reminds me of the OTC from 10 years ago, where companies or other exchanges won't let you dual list anymore. Like brokers don't let you trade. TD, or I'm not sure if it's Interactive Brokers, but I know TD Ameritrade and other platforms don't let you trade on the CSE. So personally, like, there's a lot of disclosure issues with CSE companies as well. We've seen a lot of shenanigans happen. Actually, at our events, we don't allow CSE companies unless I know the CEO personally, and he's a good friend of mine, and that's very, very rare. So at the Dodgy Gold Message coming up, we have one CSE company presenting because I'm a personal friend of the CEO. Managed brokerage accounts, there's Sprott, Haywood, for example, that I know have US licenses. Happy to put you in touch with their brokers and make that introduction if there's an interest. Market sentiment. It feels like we're in a bad market. It really feels, sentiment is brutal out there. But 2015 was worse. 2013, we only raised $2.4 billion in the junior mining sector. This year to date, we already raised $5.1 billion. We raised twice as much money than in any other, like in the bad years when it was really, really bad. And that has me very positive, actually, because the companies can actually produce shareholder value. Yeah, the share prices are depressed right now, but they're generating value for you, and that's the opportunity. If you believe that the market has bottomed, this should give you confidence to invest because the companies have the money and are generating value for you, and it's there. They are drilling. Even if the stock is going down 20%, they're producing results for you. Just a couple stock tips? Stock tips? Anybody? Yeah? All right. I was hoping they'd be here, but they pulled out last minute. GR Silver Mining. Take a look at them. They've recently put out a resource, 81 million ounces silver equivalent. First Majestic is an investor, 52 million market cap. I'm quite open about disclosure. They're a client of mine. Okay? Same with Maritime Resources. That's why I put the asterisk there. So I do get paid by them. Okay? but they're my client for a reason. As I said before, like I'm fortunate that I can actually turn clients away these days. 2015, I couldn't, but we can turn clients away. So we like working with the better ones. Maritime Resources, that's a chart that looks very, very similar to the Minera Alamos chart. They had a huge warrant overhang here. Once that was removed, the stock started moving. And then the summer doldrums hit. So, but it's very similar if you look at the beginnings of it, structure, share count actually. They have way too many shares outstanding. They have over 400 million shares outstanding as well. But if you look at it, it's very similar to that chart. They're going to go into production in 2023 out in Newfoundland. PA looks fantastic at $1,500 gold, 65% IRR. One of them I own quite a bit of. Another one is Bunker Hill Mining. I'm doing my gut check tomorrow. Actually, this afternoon, I'm going to site. But looking at the share price and knowing the management team, I met them last October in Toronto. There's somebody behind it, so I'm curious to see what they're doing. I'm willing to hitch my wagon to it and see where this goes. It could be quite interesting. It's only 40 minutes from here, so even that's maybe one other thing. Like if you live close to a project that you're invested in, reach out and go and drive by. Companies are happy to host you. They're happy to show you around. So there's usually a geologist who's always happy to chat, especially about rocks. So Visionary Gold is another one. That's a really, really high risk. That's an early stage play here in Wyoming. They're about to publish their first drill results, hopefully in the next few weeks. The asterisk means I actually own shares. I don't get paid by them. I only own shares. I bought them in the market. So there's no commercial relationship or anything. I'm just curious. This is a high-risk exploration play with a management team that actually owns 75% of the company, but I know there's more money behind it and they're not being diluted down. So I'm quite curious to see what's happening there. It's an interesting area. Going to let the drill chips fall where they may. So I think that's it. At Oren Inc., for example, is on Twitter, or at Soar Financial on Twitter. I'm on LinkedIn as well. Just reach out anytime. Happy to answer any questions. Like, makes the industry better if you guys avoid mistakes and invest better. Makes the industry a better place. Thanks so much.